Good rising, good afternoon, good evening, or good night. I am Tayla Andre. Waking up with Tayla Andre has absolutely nothing to do with the time of day that you watch this video, but about waking up your third eye with unorthodox conversations leading to universal consciousness. I am Tayla Andre, and we are going to invite Greg to be a part of the conversation so that he can explain to us the loan process and so he's already been invited. We're just waiting for him to log in. Understand the loan process. So a lot of people have a lot of questions when it comes to purchasing and what does these rates mean? The government shutdown, what does that mean? How does that affect first-time home buyers? How does it affect those that are applying for FHA? How does it affect people that currently have Section 8 tenants or tenants that are having their rent paid by some form of government assistance? And so there's a lot that needs to be understood, and I want to bring on an expert because even though I know a little bit, I want you guys to hear directly from the experts that have been in the business for years. I think Greg's been in the business for almost 20 years, and he knows anything and everything there is to know about loans, financing, and what you need to do in order, how are you, in order to purchase a home. So, with that being said, Greg, where are you? Let's go, Ramoose. So I am Tayla Andre, and Greg will be here shortly. So for those that do want to purchase a home, I first want to give you what should you be waiting for? What should you be looking for? There you are. Come on, Greg. Hello, Mr. Hart. Happy New Year. Adding Greg. Taranisha, give me a call back. Maybe it went to voicemail, and honestly, I have about 600 voicemails because I don't check them. That's my fault. 617-459-0041, or shoot me a text message and I'll call you as soon as this live is over. Greg, how are you?
Hello, Tayla. Happy New Year to you and to everyone. How you doing?
Happy New Year to you.
Thank you.
So today, I already gave them a quick preface about what we're discussing, talking about financing and purchasing a home and what does that loan process look like. And then we're going to switch gears and talk about what the government shutdown means to those that are applying for a FHA loan. So first and foremost, those who don't know, this is Greg. He is a loan officer, and I believe I told them that you've been in the business for approximately 20 years.
Yes, close.
Close to 20 years.
Right.
So what is it exactly? I'm a first-time home buyer. I'm really scared. I'm really nervous. What does that process of applying for a loan look like?
Right. So it's a great question. So first off, most of the clients that I actually work with are first-time home buyers. So I feel like we've perfected the craft or the process for a lot of these first-time homeowners. So I've been a first-time homeowner or home buyer, excuse me, myself. So I know how nerve-wracking it could be, like you mentioned. So what we usually do to start is just have an initial phone call or a meeting if possible. And I just kind of get an understanding of what the client is looking for. And it'll help reiterate some of the conversation that they've had with you as a real estate agent. And it gives me some background information in terms of thinking about as I'm kind of putting together their pre-approval, right? So we start with that. And then if they have any questions on top of mind, I'll give them that opportunity to ask me any questions that they have, or even ask about me. And then what we usually do is I direct them to an online application that we use, which is very user-friendly. You can actually download it on your phone as an app, or you can do it on your desktop. And you can start, finish, go back to it. And then more importantly, you can actually use it as a means to upload some documents, and we have everything listed there, right? So it's a series of questions that are answered, some documents that you can upload if you have them available. And then all of that comes directly to my computer. And I start the process at that point, which is an evaluation. So I'm looking at the client's credit profile, their assets, their income, their employment history, all of that. And I put together a series of scenarios that I think would work perfectly for that client, right? Based on their profile from an underwriting perspective and what they've given me when we had our phone conversation. So I kind of take both of those into perspective and put together these scenarios. I email it to the client, and it's very, very specific. It shows a breakdown of their rates, payments, closing costs, and then various purchase prices that I think would work, right? And then we set up
So
a consultation. Yes,
really quickly. So what I tell you over the phone, and a lot of people go online and they say, you know, I make $69,000 a year. My credit score, I believe, is 685. And that is, what is the difference between a pre-approval and a pre-qualification?
right. So prequal is exactly what you just mentioned. Someone who's just kind of giving me verbal information. So we're making a lot of assumptions. We haven't verified anything. And based on those assumptions, we do kind of a real quick evaluation or kind of a cursory review, and we can give them a prequal. To be honest, it doesn't really have any value whatsoever. It's really just a quick overview, just kind of give someone maybe an understanding if they're like very, very, very early stages of buying, or they're just kind of in the exploratory phase. A prequal is okay. It doesn't hold any value. I mean, you could attest to this as a real estate agent. If you see a prequal, you're going to ask for a pre-approval, right? So pre-approval is going to take it one step further, which is do a lot of the confirmation, the credit, the income, the assets, all of that. And then we kind of know, yes, with some assurances that we can get financing, and then it's what they call a pre-approval letter. That's a great point. In the past, you saw a lot of pre-qual letters. Now, to be honest, I don't recommend a pre-qual letter. I think it just doesn't have any weight. It doesn't hold any weight in the marketplace. But certainly we kind of work off whatever the client's looking for.
So let's say, for instance, I think I'm ready to buy, but I'm not quite sure, and I don't want you to pull my credit.
Right.
Is a pre-qual then something that would be acceptable if I'm in the pre-market? Like, I think I want to buy, but I really don't, I'm not sure.
Yeah, I get that question a lot. And my answer to that is we can still go through the pre-approval process, right? And what I described, which is the application and all of that, and hold off on the credit check, right? If people are familiar with their credit, meaning not just their credit score, but also what's listed on their credit, like any debt that they're carrying, student loans, things like that, we can take all that into consideration. And I can still put together that entire evaluation process that I described before, and still give some, we're still making some assumptions, but at least we're getting a little bit closer to an understanding of what programs and what the numbers would look like. So that's totally cool. And we could start with that. And then the great part about it is once we have everything already on file, pulling the credit takes 30 seconds, right? So we can easily transition from that phase to a formal pre-approval. So that's fine too.
So you mentioned different products, different programs.
Right.
What are some of the most popular programs or products that customers use?
So for first-time home buyers, really, there's I'd say four that we really hone in on. One is the FHA. The other is a program called the Home Possible program, which is something that is sponsored by Freddie Mac. Another is Home Ready, which is sponsored by Fannie Mae, and then the fourth would be Mass Housing, right? So as I mentioned to all my clients, I say each program has pros and cons, right? Nuances with the programs that may fit one criteria may not fit another. So that's part of the evaluation process that we go through. Sometimes the client qualifies for all four, and I feel as though all four are great for the client. I'll list all four of those programs in my spreadsheet and then send it to the client. And then in our follow-up meeting, we'll kind of go through them and discuss each one and all the numbers. And then I'll let the client decide which one they feel most comfortable with. Yes.
So basically, not every program is cookie cutted for everyone.
No.
You have to look at your specific situation and what applies to you.
Right.
What I would say, again, I'm a first-time home buyer. I'm really nervous. I don't have the highest credit score, and I'm really deterred from purchasing a house right now.
Right.
I'm not familiar with rates. I'm not familiar with anything. Like, I know nothing.
Right.
No one else in my family is a homeowner, so I
Yeah.
don't have any real guidance. How would you guide me in making me feel secure enough to believe that as a full-time employee with a little bit of savings, not the best credit, that home ownership is the right decision for me?
Absolutely. I think home ownership is always the right decision. I think it's a great investment. I think it's one of the most important investments that an individual will make in their entire life. And it's a very fulfilling scenario, a fulfilling achievement for someone. So I never deter anyone from calling or having these types of conversations. I will still recommend going through the pre-approval process, even if someone felt that their credit was not up to par. There are many different levels of credit, right? There's no such thing as good credit, bad credit, all of that. And I'll still evaluate every single situation. There are programs out there that have some leniency towards maybe lower credit scores, right? That's one aspect. Number two is part of what I do is also evaluate credit and provide some guidance or some feedback on what a client could do to maybe improve their credit score to get themselves to that point of qualification. So in other words, we can put together the entire scenario, show everything that's available. They may not qualify per se, but they may be very close, right? And we set a goal for them and we say, okay, here's what we're going to do. Here are the steps that, we run a credit analysis, right? And we follow the steps. And I say, just work on this. And then let's reevaluate things in about a month or so. And then kind of take things from there. So never deter anyone. Always programs available. There are programs like Mass Housing, for example, that offers a 3% down payment assistance, right? So they'll actually give you a loan that's a 15-year fixed at 1%, which is an amazing terms for your down payment. So that's great too. So there are a lot of different scenarios out there for first-time homebuyers.
Okay. So I give Tayla a call. I want her to be my real estate agent, and
Great decision. Great
I
decision.
and I am ready to go through the process with Greg or whomever I may already have in my pocket to become a homeowner and look for a loan. What
Right.
documentations do I need to have, or should I take to work with me? Because that's where I'll probably be doing most of my uploading.
Right, right. That's an amazing question, a great question. So generally we look at W-2s, the last 2 years of W-2s, the last 2 years of tax returns, the most recent month of pay stubs, and the last 2 months of bank statements. So that could include retirement accounts, checking, savings accounts, things like that. And that's pretty much it.
So what if I don't have my W-2s? What if I have my tax return or my tax transcript, but I don't have the actual W-2 itself?
Right. That's okay. I mean, for the purposes of getting the pre-approval, as long as we start with the application, we can move to gathering the income documents at a later time. Um,
Hmm.
if physically they cannot find their W-2, what I generally suggest to clients is to reach out to their HR department or their payroll department, and they usually have something archived.
Hmm.
So we could work off of that as well. But people should not. I get this question all the time. Oh, I don't have these documents with me. I have to wait. And I tell them it's okay. It's not something that it needs to be done right this moment. If they have an understanding of what their salary is or what their income is, we can just work off the application. You answer some of those questions, and then further down the line, as we continue, they can upload these documents on this the portal that we have
Which is either an app or can be done on your
on.
laptop or
Right,
desktop.
right.
How much money do I need to have? I only have a little bit of savings. I don't
Sorry.
have that much savings. So how much money do I need to have before I give Taylor a call?
Right. That is a great question. So because of a first-time homebuyer program, as I mentioned to you, there's a mass housing program, for example, that offers down payment assistance, right? So each program has different criteria in terms of down payments. For example, if we looked at an FHA loan, it would be 3.5%, right? That's the minimum. If we looked at a home possible loan program, it's 3%. If we looked at a home ready program, that's also 3%. Mass housing has a 3% program, but then they also give you that down payment assistance loan So you could essentially, it's maxed out at 3% or 12,000, whichever is less. You could essentially, if you bought a house for 400,000 and you qualified for the mass housing loan, you could get the house for 0% down. So it runs the gamut. That's part of the evaluation. So again, I never deter anyone. There's no such thing as having, this notion of I got to have 20% or I got to have 10% or I got to have this or I got to have that. People, it's never too early to start. If someone is motivated and really wants to be a home buyer, they should call. They should call you, and then they should call me, because we can go through that process. And even if someone, if we decide, if we come up with the solution or the conclusion that they're just not ready, that's okay, because we can put them on that path, and at least we'll give them some guidance, so they're not kind of, walking in the dark, trying to figure out where they need to be in order to get to that point, to that goal. That's part of what we'll do, is I'll set, the series of steps for them and say, okay, in this particular case, your credit has to be here, and then maybe you'll need this much for down payment. But either way, we'll put them on the right path and get them to that point.
That's awesome. That's so awesome because, I was just over here wondering if I'll ever be a homeowner because, third party, not Taylor Andre, I don't have any money saved. I know my credit is a 600. I don't owe nobody, but I don't really feel comfortable getting credit cards. What happens then when I have no credit, but I don't want to get credit cards, or I haven't gotten credit cards, or, I like paying for cash for
Right.
things.
Yeah. So having no credit, that's problematic. When I say problematic, I mean that is something that you have to have a credit score. You have to have a credit profile, right? So if I find a situation like that, I do tell the people, I say, listen, if we need to establish a credit history and you don't necessarily believe in credit or, putting yourself in debt, you can still establish a credit history and be very financially sound about it or smart about it, right? So for example, you can take out a credit card, use that credit card, and just pay it at the end of the month. So then you're not incurring any interest and, making money for the credit card companies, right? So that way you're establishing a credit profile and a credit history, but also doing it with some financial sense, right? So that's what I generally tell people if they don't have any credit history, and I totally understand that people don't want to put themselves in debt, and I think that's a great thing, right? They're being responsible, financially responsible, but you still need to have some established credit history. That's what I would say. Take out a credit card, use it, pay it off at the end of the month. So in a situation where you would just pay cash, use your card, right? But still pay it at the end of the month. So that way, again, you're not incurring any interest, but you're still establishing a credit history. That's the solution there.
Awesome. So right now, the government is shut down, and a lot of people are up in arms. But I actually remember when Obama was president, the government shut down a couple times.
Exactly.
So I would love for you to reassure everyone that the government shutdown is not the end of the world. It has happened before. It most likely will happen again. But what does it currently mean for those that are looking to apply for an FHA loan, a multifamily FHA,
Right.
and or if they're already homeowners and have tenants that currently pay through government means?
Right. So you made the point, which is that we have been through a government shutdown before. So I think so certainly people shouldn't be alarmed. I think it's something that is more of a logistical situation than anything. There are really three factors that the government shutdown would have impacted or has impacted the loan process. That would have been on FHA, which is what you mentioned, which is the Federal Housing Authority, right? The FEMA, which drafts the flood insurance policies, national flood insurance policies, right? And then IRS. So with FHA, surprisingly, we got a notification that the government shutdown did not impact any of the process with FHA except for one thing, which is an FHA condo approval, right? So when you're buying a condo and you're applying for an FHA loan, the condo has to be approved by the FHA department, right? There are a series of documents that are gathered and they kind of review the health of the association and so on and so forth. So that was one thing. Everything else would have been fine. So that's good. The transcripts, the IRS, it would have been the transcripts that we usually retain for the loan process. A transcript is basically your tax return it's summarized and then kept in an archive with the IRS. And we get these from the IRS to just verify the tax returns that we have to make sure that the client hasn't done an amendment or anything like that, or none of the numbers have changed, right? Those were impacted. In other words, we weren't able to get any transcripts during the government shutdown or while the government shutdown. Interestingly enough, yesterday we started getting them in. So I think they lifted that portion of or that department or whoever was handling that. So that's good news. The other part, which is the flood insurance policies that were generated through FEMA, those were impacted. They couldn't generate new flood insurance policies or do any renewals. That was actually lifted yesterday as well. So that's a good thing. The only thing that hasn't been lifted is this thing called a USDA rural development loan, which doesn't necessarily apply too much in the greater Boston area, but there are pockets in Massachusetts that are considered rural areas. And there's a specific program that a lot of clients could qualify for. That has been impacted. That's at a standstill right now until the shutdown is resolved. So I think because we've gone through this a few times, I think they were kind of anticipating some of these issues from previous years. So I think they did a decent job of kind of keeping things status quo for the most part, so that weren't, impacting purchases. Because I remember the first time it happened, it was probably a few years ago. It was a problem because, you had people literally closing within a few days, and all these different things were up in the air, and we couldn't get certain documents, and we were kind of scrambling to try to make things work. And there were some purchases that were held hostage, for lack of a better term, and people couldn't close. And I think they learned from those mistakes, and they anticipated these issues from happening, so they were able to kind of work through them. So that was good.
Awesome. Is there anything that we did not cover that you do want to mention to those that are currently interested in becoming home buyers?
No, you asked great questions, Taylor. I think you're amazing. You guys should all reach out to Taylor at some point in time. She's got a wealth of knowledge. She's really great. The only thing I wanted to mention is this year for 2019, they increased the loan limits for these loans, these programs that I mentioned to you, which is significant. They increased them by 7%, right? And this is significant because obviously prices of homes, we live in a great area, and prices of homes continue to increase, right? There's appreciation, which is a healthy thing. And increasing the loan limits allows us it gives you as a buyer more purchasing power, right? So it allows us to tap into these programs that we mentioned because the loan amounts have been lifted to help, compete on some of these purchase prices. So that's been a good thing. Other than that, rates have subsided. So some good things have been happening in the economy, and which caused rates to come down since the beginning of, so I would say since like November or so. So that's a good thing. I think we're geared up for the new year. I think things are really good. I've been talking to a lot of my clients, and everyone's really excited about the new year. They're saying great things about the housing market. They're really excited about getting out there and either listing their homes or making offers on homes. So I think it's going to be a really healthy purchase market, which is great for us.
Awesome. Thank you so much, Greg. Can you please tell the people who you are, and aside from them contacting you through me, how can you be reached?
Yes, I appreciate it very much. My name is Greg Giokis. I work for a company called Residential Mortgage Services. I have been doing this for almost 20 years, 16 years. So not quite 20, but I'm getting there. So a wealth of knowledge. I love to talk to people. I love to help people. As I mentioned, I work predominantly with first-time home buyers. So I love that aspect of what I do. If you need to reach me, I'm always available. You can call me. My number is 617-791-2054. You can email me. My email address is greg.giokis, spelled Giokkas, at RMS Mortgage, spelled rmsmortgage.com. And I'd love to hear from you. Even if you have any questions, it doesn't have to, be a situation where we have to go through a pre-approval, but even if you had some general questions or wanted to just pick my brain, I'm here for you.
Awesome. Thank you so much, Greg.
Thank you. I really appreciate it. Thank you.
All right. right. I thank you. I love you. I appreciate you. Nobody else had any other comments or questions in the comment section. I do want to say, as far as Bella is absolutely right. If you don't have any credit and you don't want to get a credit card, go ahead and get a secure card. That's when you go ahead and take whatever money you have in your hand and you put it on a card and you utilize that money. So you're still building your credit without setting yourself up for failure. I thank you. I love you. I appreciate you. And I hope you guys have an amazing day. I am Tayla Andre. Waking Up with Tayla Andre has absolutely nothing to do with the time of day that you watch this video or listen to this podcast, but about waking up your third eye with unorthodox conversations leading to universal consciousness. 617-459-0041. TAYLAANDRE at thumbprintrealty.com. Like a fingerprint, but your thumbprint.